Hello, and thank you for joining today's Ready, Set, Retire presentation for certified peace officers, custodial officers, and correctional officers of the state of Texas. We call these CPO/CO employees for short. Today's topics: law enforcement and custodial officers supplemental retirement fund, your income at retirement, also known as the three-legged stool, eligibility, service credit, ERS annuity, three steps to retirement, benefits at retirement, and resources for more information. The Law Enforcement and Custodial Officers Supplemental Retirement Fund, or LECOS, is a supplemental retirement program created by the Texas legislature to reward certified peace officers, CPO, slash custodial officers, CO, employees who have 20 or more years of hazardous duty service. The men and women who serve the state of Texas in these physically demanding and hazardous jobs may be eligible to retire at a younger age, or they may be eligible for a higher monthly annuity than the rest of the state agency population. These employees contribute an extra 0.5% of their salary to the supplemental fund. We'll discuss later in the presentation how annuities for employees with 20 or more years of CPO/CO service are calculated differently to provide a higher retirement payment. We'll also go over how CPO/CO employees can meet retirement eligibility at an earlier age. The five state of Texas agencies with the CPO/CO employees are Texas Parks and Wildlife Department, Texas Department of Criminal Justice, Texas Juvenile Justice Department, Texas Department of Public Safety, Texas Alcoholic Beverage Commission. Please note, there is a small population of employees who work for the Texas Juvenile Justice Department that are CPO/CO employees. Let's get started with your income at retirement. As you consider retirement, it is important to think about your financial position. Most financial advisors say you'll need about 80% of your pre-retirement income to comfortably maintain your current lifestyle after retirement. Think of your retirement as a three-legged stool. The three legs are your state of Texas retirement, your personal savings such as the Texas Saver 401k or 457 program, and your Social Security Administration SSA benefits. Your ERS annuity alone may not provide the recommended 80% of pre-retirement income, so your personal savings and Social Security benefits may be needed to attain a stable income in retirement. If you're eligible to retire before you can start receiving benefits from Social Security or draw from a personal retirement account like Texas Saver, you may need to supplement your income with a part-time job if your ERS annuity alone isn't enough to cover your expenses. ERS annuity. The first leg of your retirement stool is your ERS annuity. Your ERS annuity is paid to you for your lifetime. Your years of service and your highest average salary determine the amount of your annuity. The longer you work, the higher your annuity will be, especially if you work 20 or more years in a CPO or CO job. The average CPO/CO state employee retires with a little over 21 years of service and an average gross standard annuity amount of a little over $1,940 monthly. This equals about 60% of his or her salary. You can get your own annuity estimate on the ERS website. Instead of receiving a paycheck on the first day of the month, your annuity is paid the last business day of each month after you retire. Although there is no provision for a cost of living adjustment, COLA, if the fund that pays annuities is actuarially sound, there's a possibility that retirees could receive a small additional payment. However, the fund is not expected to be actuarially sound for the foreseeable future, and we don't advise that you plan on such additional payments. The second leg of the stool is personal savings. This includes the tax-saver 401k or 457 program, individual retirement accounts, IRAs, a personal savings account or retirement accounts you may have from previous employers. Your personal savings play an important role in your financial stability at retirement. If you aren't already, you may want to consider investing in a tax-saver 401k or 457 or some other type of retirement account. If you have a personal savings account, an IRA, or retirement account with previous employers, you can talk with the tax-saver representative to discuss your options to maximize your savings. For most ERS members, the third leg of the retirement stool is Social Security Administration, SSA benefits. SSA benefits don't reduce your ERS annuity. Social Security benefits are different for everyone. If you qualify for SSA benefits, you may be eligible to draw SSA payments as early as age 62, but would receive a reduced payment. If you wait, you will receive a higher amount at a later age until you reach your maximum benefit. The age you are eligible to draw benefits is based on the year you were born. The age you're eligible for SSA benefits is separate from the age you're eligible for Medicare Part A and Part B. Visit ssa.gov for more information or call 1-800-772-1213. When will I be eligible to retire? Will I be eligible for insurance at retirement? These are the two main questions on almost every state employee's mind. Employees in the state of Texas retirement program are classified in three groups, and the retirement eligibility rules are different for each group. The group you are in is determined by your first hire date. The three groups are Group 1, members hired before September 1st, 2009. Group 2, members hired on September 1st, 2009 through August 31st, 2013. Group 3, members hired on September 1st, 2013 or after. Withdrawing your retirement account removes you from your retirement group. For example, if you were in Group 1 but left state employment and withdrew your retirement contributions, then returned to work for the state after September 1st, 2009, you would no longer be in Group 1. You may choose to buy back your service credit to help your retirement eligibility, but you won't be in your previous employee group. If you left state employment and did not withdraw your retirement contributions, your original hire date will determine your retirement group. Next, we'll talk about your retirement benefits in more detail. First, let's look at members who retire with fewer than 20 years of CPO/CO service credit. This can be a combination of regular service, a position that is not considered a CPO/CO position, transfer service, or sometimes purchase service, and CPO/CO service. Later in the presentation, we'll discuss how your annuity is calculated. Generally, if you have fewer than 20 years of CPO/CO service credit, you are not eligible for an enhanced annuity available to those with more than 20 years of service. Any additional retirement contributions that aren't factored into your annuity calculation are refunded to you in a one-time lump sum payment. If you were hired before September 1st, 2009, Group 1, your minimum age to retire is 60 with at least 5 years of service, but you would not be eligible for insurance benefits once you retire. In order to be eligible to retire with insurance benefits, you need to have at least 10 years of service and retire at age 55 or older. If you are in Group 1, you are not subject to reduction for retiring before the minimum retirement age. If you were hired September 1st, 2009 through August 31st, 2013, Group 2, you are subject to a 5% reduction in your annuity for every year you retire before age 60 with a 25% cap. If you are in Group 3, hired on or after September 1st, 2013, you need to be 62 years old to receive your full benefit. If you retire before age 62, there will be a 5% reduction in your annuity for every year under this age with no cap. Now, let's look at members who have 20 or more years of CPO/CO service when they retire. If you retire with 20 or more years of service, you are eligible for your annuity to be calculated using the higher service multiplier of 2.8%. There is more on the service multiplier to come. If you have the 20 years of service at retirement, you would also be eligible for insurance benefits. You are eligible to retire at any age, but your retirement group is a factor in determining the amount of your monthly annuity benefit. If you are in Group 1 and you retire before age 50, your annuity will be reduced. The only way to avoid this reduction is if you meet the rule of 80, age plus service equals 80, at the time of your retirement. If you are a Group 2 member, you can retire at any age, but if you retire before age 55, you receive a 5% reduction in your annuity payment for each year before age 55, up to a maximum reduction of 25%. Group 3 members who retire before age 57 receive a 5% reduction for each year before age 57 with no cap. We've covered the different ways you can meet retirement eligibility when you're retiring directly from state employment. Some CPOs, CO employees decide to leave employment before retirement age so they avoid a reduction in their annuity. If you decide to leave employment, you can leave your retirement funds with ERS, and once you reach full retirement age, contact ERS to retire. You avoid a reduction in your annuity that way. However, you won't be eligible for health insurance and other GBP benefits until you retire, and you won't be able to apply any unused sick and annual leave towards your years of service to increase your annuity amount. You will also have a 60-day health insurance waiting period following your retirement date. Because unused sick and annual leave cannot be used towards your retirement, you will need to speak with your agency about what happens with those balances once you leave employment. Now that you know how you can become eligible to retire with health insurance, let's learn when a health insurance waiting period applies. If you retire as a contributing member directly from state employment, you won't have a waiting period for health insurance or optional coverage. There will be no break in your coverage. Non-contributing members are members who leave state employment and leave their ERS retirement account with ERS. If you retire as a non-contributing member, you'll have a 60-day health insurance waiting period. There is no waiting period for optional coverage, such as dental or vision benefits. This means you could elect optional coverage when you retire, and those benefits will start the first of the month following your retirement date. Evidence of insurability, EOI, is required for the life insurance. Call ERS to request your retirement. It's your responsibility to call ERS to request retirement. It's especially important for non-contributing members to remember to call ERS a month or two before they plan to retire to avoid missing retirement checks. Remember, your annuity is partially based on your years of service. If you're no longer working for the state, you aren't increasing your years of service, but you may be able to avoid a reduction in your annuity by waiting until a certain age, based on your retirement group, to apply for retirement. The three retirement groups we've discussed determine the eligibility rules that apply to you, but what about retiree insurance benefits? Many state employees want to know, will I get 100% of my retiree health insurance paid for by the state? How is that determined? Well, under current legislation, if you had at least 5 years of service with an agency that participates in the Texas Group Benefits Program, GBP, on or before September 1st, 2014, the state pays 100% of your health insurance premium for members retiring as full-time, 50% for members retiring as part-time. If you don't meet the eligibility requirement, the state's health insurance premium contribution, the amount of the premium the state pays for you, is based on the number of years of service you had with a GBP participating agency when you retired. 50% with 10 up to 14 years 11 months, 75% with 15 up to 19 years 11 months, or 100% with 20 or more years. It's important to remember that health and other insurance benefits for employees and retirees are based on available state funding and subject to change. The Texas Legislature determines the level of funding for such benefits and has no continuing obligation to provide those benefits beyond each fiscal year. We've learned how your years of service determine your retirement eligibility. Now let's learn about the different types of service credit. Earned service credit includes monthly service credit. For every month you work and make a contribution to your ERS retirement account, you earn a month of service credit. The first 3 to 4 months of service for certain CPO employees are sometimes classified as regular state agency service credit instead of CPO service. That's usually because you were in training the first 3 months of your state employment. Most of your service credit should be counted as CPO, but there are certain types of service credit that only count as regular service credit. In those cases, the regular service credit still increases your monthly payment, but it doesn't count towards the 20 years of hazardous duty service credit a CPO employee needs to calculate his or her annuity using a higher percentage. Group 1 members can earn service credit for both your unused sick and unused annual leave if you retire directly from state employment. This service credit helps to increase your annuity and can help you meet the 20 years of CPO service credit sooner. Service credit for unused sick and annual leave is calculated separately, and you need 160 hours to earn your first month of service credit. Any fraction over 160 hours is calculated as full month. Check out page 11 of your Planning Your Retirement booklet for a helpful chart. Most agencies report your leave monthly to ERS. If so, it's reflected in your ERS account when you log in to create your own estimate. Many members ask about payout for unused leave. There's no payout for unused sick leave, but you could be paid out for your unused annual leave. In fact, you have a few options. You could have your unused annual leave paid out to you, but will be taxed. You could roll it over to your taxes saver account to avoid the tax, or you can have a portion rolled over and a portion paid to you, paying taxes on the amount is paid to you in a lump sum. Now, ERS doesn't handle the payout for leave, so contact your agency's benefits coordinator with any questions. Groups 2 and 3 members are not able to use unused sick and annual leave as retirement service credit. Teachers Retirement System, TRS service. If you participated in TRS and didn't withdraw your account, you can transfer your service when you call to request your retirement with ERS. You receive one retirement check. Your TRS service won't show up in your ERS account and is counted as regular state employee service credit. That means it won't count towards the 20 years of CPO service credit. The TRS service will be calculated at a lower percentage, although it would still increase your monthly payment. You'll need to contact ERS if you would like a retirement estimate that includes TRS service. If you withdrew your account and are interested in buying back your TRS service, you need to contact TRS about purchasing that service before you process your retirement with ERS. Proportionate Retirement Program, PRP. Participating in retirement systems included in the Proportionate Retirement Program, PRP, such as the Texas County and District Retirement System, TCDRS, or Texas Municipal Retirement System, TMRS, may help you meet the Rule of 80 sooner, but it won't help to increase your annuity. It also won't count towards reaching 20 years of CPO service credit. Your retirement check with ERS will be based on your ERS service credit only. You would need to contact your other system to find out if you are eligible for a retirement check with them. If you participated in a proportionate system, call ERS so we can certify your service. There's a full list of proportionate systems on page 13 of the Planning Your Retirement booklet. Optional Retirement Program, ORP. This is an option for higher education employees who choose not to contribute to TRS. ORP service credit helps state agency employees meet the rule of 80 sooner and can be used towards insurance eligibility as long as you haven't refunded your ORP account or have an ORP account that you're eligible to draw an annuity. ORP service won't help increase your annuity and it won't count towards the 20 years of CPO service credit. See page 11 through 13 of the Planning Your Retirement booklet, PYR, for more detailed information about earned service credit. Purchasing service credit helps increase your years of service and/or may help with your annuity calculation. If you worked for the state in the past, withdrew your retirement account, and then returned to work for the state, you can purchase all or some of your refunded service. It will count as CPO/CO service credit as long as you were in a CPO/CO employee at the time. If you served in the military, you can purchase up to 60 months of active duty service as long as you aren't eligible for military retirement based on 20 or more years of service. You need to send ERS a copy of your military record, DD 214 or NGB 23. Your military discharge must be honorable. Service in the reserves is not eligible for purchase. In order for your military service to be used for your retirement, you will need to have at least 5 years of ERS service credit. Keep in mind that most of the time, purchased military service is counted as regular state employee service, not CPO/CO service. There are a few exceptions where it could count as CPO/CO service. For instance, if your military service was between any CPO/CO dates of employment, you may be able to count that purchased military service as CPO/CO service. If you think this could apply to you, please contact an ERS customer service representative by phone. The cost of refunded and military service increases by 10% every year on September 1st. If you were hired between September 1st, 2003 and August 31st, 2014, you had a waiting period before you started contributing to your retirement account with the state. The length of your waiting period depends on when you were hired. Keep in mind that sometimes the waiting period is not counted as CPO/CO service. This happens because typically when you start work, you are in training, and the contributions during this time are not CPO/CO contributions. After you purchase all of your available service, you could purchase up to 3 years of additional service credit. Additional service credit must be purchased in 1-year increments unless you need a specific number of months to meet eligibility and you are applying for retirement. The cost of waiting period and additional service credit is based on your years of service, age, salary, and actuarial factors. Because of this, the cost changes every year on your birthday. If you want to know how much it costs to purchase service, you can request a service purchase coupon online. ERS can only email a coupon to the email address on file. You can update your email address through your ERS online account if necessary. If you don't have online access, you can always call our customer service department to request a coupon. Don't worry, you don't have to purchase a service if you don't want to. You have different payment options. You can pay with a personal check or money order. You can roll over funds from your Tax Saver 401k or 457 plan or another eligible pre-tax account. You'll need to contact ERS to start the rollover, or you can do a partial rollover and pay the rest with a check or money order. Service purchase must happen before your retirement date. Now that we've discussed earned service credit and purchase service credit and how service credit helps to increase your annuity, the more years of service credit you have, the higher your monthly annuity. I'd like to talk about your annuity in more detail. Let's start with how your annuity is calculated. We will look at each group in detail. The Texas legislature sets the formula for calculating annuities. For CPO, CO employees, your annuity is calculated using your salary, years of service, and a service multiplier. If you're in Group 1, ERS calculates your annuity using the average of your highest 36 months of salary on file. Overtime pay, comp time pay, and one-time merit bonuses are not included when we calculate your highest average salary. If you have at least 20 years of CPO/CO service, we use a service multiplier of 2.8% to determine a percentage value for your service. There's a chart on page 6 of the Planning Your Retirement booklet with the percentage values. Any non-CPO/CO service is calculated using a 2.3% multiplier. If you have fewer than 20 years of CPO/CO service, the benefit multiplier also is 2.3%. In this example, the member's average salary is $3,000 and he worked 25 years with the state. We multiply 25 by 2.8% to get the percentage value of his service credit, 70%. We multiply his average salary of $3,000 by the 70%, and that gives us the gross standard annuity amount of $2,100. Don't forget about deductions. Your annuity is taxable, and therefore federal income taxes are deducted. In addition, if you retired as a part-time employee or you choose health care coverage for your dependents, health insurance premiums are deducted from your annuity payment, along with the tobacco user premium, if applicable. If you're enrolled in optional coverage like dental, optional life, or dependent life, the premiums also come out of your annuity. You will not pay Social Security or Medicare, also called FICA, taxes on your annuity payment, and it is not considered earned income wages. If you return to active employment anywhere, Social Security and Medicare taxes are deducted from your salary, because that income is considered earned income wages. The calculation is the same with each group, but groups 2 and 3 are subject to age reduction factors and use a different number of months for calculating your average salary amount. In this example, the salary figure is based on an average of the member's highest 48 months of salary, or $4,000. Because the member has 25 years of CPO service, we multiply his years of service, 25, by the 2.8% multiplier, which gives us 70%. 70% of the member's highest average salary of $4,000 gives you a standard annuity of $2,800. Because the member is 50 years old, 5 years under the minimum retirement age of 55, he is subject to a 25% reduction in his monthly payment. That's 5% per year for 5 years. If we start with this initial standard annuity of $2,800 and apply the 25% reduction, the member's new annuity is $2,100. Let's look at how a Group 3 annuity will be calculated. In the examples we just discussed, the members were hired before September 1st, 2013. Let's look at an example for a member hired on or after September 1st, 2013. ERS starts with the average of the member's highest 60 months of salary. If that average is $5,000 and the service percentage we calculate is 70%, we get a standard annuity of $3,500 without a reduction. If the member is retiring at age 51, or 6 years before the minimum retirement age of 57, she is subject to a 30% reduction in her monthly payment, 5% per year with no cap. If we take that standard annuity of $3,500 and multiply the 30% reduction for retiring before age 57, the final annuity is $2,450. In these examples, we looked at how ERS calculates your gross standard monthly annuity amount. You have options for how you want this amount paid out. They are standard annuity. This option provides your highest monthly lifetime payment. Payments will not continue after your death. However, if there is money in your account upon your death, your survivor receives a one-time payment. You can designate one or more beneficiaries. You also have options for leaving a monthly annuity check to a beneficiary. Survivor options 1, 2, and 5 lower your annuity for your lifetime, but after you die, your beneficiary would receive a percentage of your gross annuity amount for his or her lifetime. With these three options, you can choose only one beneficiary. Option 1 pays your beneficiary 100%, Option 2 50%, and Option 5 75% of your gross annuity check. If you choose Option 1 or 5 and your beneficiary isn't your spouse, for an example, a child, the amount of the annuity could be reduced based on the age difference. With these three survivor options, if your beneficiary dies before you, your annuity would increase to the standard annuity amount for the rest of your life. You don't have the option to name a new beneficiary. Survivor options 3 and 4 work differently. With these options, your lifetime annuity is still reduced, but your beneficiary is paid only if you die in the first 5 years after you retire, Option 3, or the first 10 years, Option 4. You can designate one or more beneficiaries. With Option 3, your beneficiary receives the remainder of 60 monthly payments, and with Option 4, your beneficiary receives the remainder of 120 monthly payments. The 60 and 120 payments are from the date you retire, not the time of your death. When requesting your retirement, we will ask you if you want to take a partial lump sum option, PLSO payment. A PLSO is a one-time payment equal to 1 to 36 months of your standard annuity payment paid to you as a lump sum about 5 business days after your first retirement check. If you take a PLSO, your monthly annuity is permanently reduced. If paid directly to you, it will be taxed at 20%. If you retire from state employment younger than age 50, you may have an additional 10% penalty when you file your taxes. You can choose to roll over all or some of your PLSO to a Texas Saver 401k or 457 plan account or a personal pre-tax account you have. Your decision to take or not take a PLSO cannot be changed once you've retired. Remember, if you retire with an age reduction, then you are not eligible to take a PLSO at the time of your retirement. Once you are nearing retirement, follow these 3 easy steps. Step 1. Log in to your ERS account. Create an estimate for your first eligible retirement date or a later date. Enter your last day working or last day on payroll. Run estimate with or without a beneficiary. Choose your payment option in your federal tax withholding. Call ERS if you have a Quadro, TRS service, or unpurchased service. Step 2. Call ERS about a month or 2 before you plan to retire. You'll need to know your beneficiary's name, date of birth, address, and social security number, which annuity option you're choosing, if you're taking a PLSO, your direct deposit info, strongly recommended, and your tax withholding info. We will email your retirement packet to you if we have your email address on file, otherwise it's mailed. Step 3, sign your retirement acceptance letter in front of a notary. Make a photocopy of your proof of age document and, as applicable, your beneficiary's proof of age document. Mail all documents to ERS, including the original notarized document. The notarized form can't be faxed. Your documents must be postmarked by your retirement date. Otherwise, your retirement request won't be processed. See page 23 of the PYR for details and list of valid proof of age documents. Let's talk about your health benefits once you've retired. After your retirement has been processed, you will receive a retiree insurance enrollment statement that lists coverage you're enrolled in and all of your options. You'll have 30 days after your retirement date to elect or make changes to health insurance. If you are eligible based on your years of service and retiring as a full-time employee, the state pays 100% of your health insurance premium and half of your dependents premium. If you are a part-time employee for the last 3 consecutive months before your retirement date, the state pays 50% of your health insurance premium and 25% of your dependents premium. Your health insurance includes a prescription drug benefit. Basic term life insurance. Your life insurance coverage will drop from $5,000 of coverage to $2,500. The state pays this premium for those retiring from full-time employment. Optional benefits. Dental. The GBP dental plan includes a PPO, preferred provider organization option, and an HMO, health maintenance organization option for you and your eligible dependents. Vision. You can choose the state of Texas vision plan for you and your eligible dependents. Optional term life. If you retire as a contributing member and are already enrolled in election 1 and 2, your election carries over into retirement. Elections 3 and 4 were reduced to election 2. In addition, there's no voluntary accidental death and dismemberment, AD&D, with the optional term life insurance at retirement. If you retire as a non-contributing member, you'd have the option to enroll in the $10,000 fixed optional life. You'd be required to submit an evidence of insurability application, EOI, and must be approved for the coverage. Dependent term life insurance. The coverage amount drops from $5,000 to $2,500 with no AD&D clause. TextFlex. You won't be able to enroll in TextFlex as a retiree, but can continue participating through COBRA if you're enrolled in TextFlex at the time you retire. Also, if you are a participant of the Texas Saver 401k or 457 program, you can still access services after you retire, but won't be able to contribute to your retirement. Depending on your lifestyle and family needs, you may want to return to work after retirement. There is no waiting period if you're returning to a private sector job. If you plan to return to work with the state, you must be retired for at least 90 days and cannot have a prior agreement with your employer to return to your job. Retirees who return to work for the state can elect active employee benefits. This will allow them to enroll in Texas Income Protection Plan, disability insurance, TextFlex, and life insurance options that aren't available to retirees. Return to work retirees are not eligible for the Health Select Medicare Advantage plan. Medicare and your state health insurance. Sign up for Part A and Part B if you're age 65 and retired. You can sign up for Medicare 3 months before your 65th birthday, the month of, and 3 months after your 65th birthday. We recommend that you sign up for Medicare in the 3 months prior to your 65th birthday. When you're eligible for Medicare, it becomes your primary coverage and your state insurance pays secondary. That's why it's important to sign up for Medicare once you're retired and turn 65. Provide ERS with your Medicare information and to be enrolled in Health Select Medicare Advantage and Health Select Medicare RX, both administered by United Healthcare. You can opt out of Health Select Medicare Advantage and keep Health Select Secondary by calling ERS, but keep in mind Health Select Secondary pays secondary to Medicare. If you plan to work past the age of 65, you don't have to sign up for a Part B until you retire. Contact Social Security and let them know you aren't signing up for Part B because you're still working. Once you decide you are ready to retire, contact Social Security about 90 days before your retirement date and sign up for Part B. ERS conducts Medicare preparation webinars throughout the year. Please visit our ERS events calendar on our website for dates. You can continue to use the discount purchase program in retirement. Shop online and buy products and services such as computers, appliances, vacation packages, and more at discounted prices. Visit https://ers.savings.bennyplace.com/home and click the Retiree button. The program includes a simple registration step. Just enter your email address and create a password. You will receive a confirmation email to complete your registration. If you've already signed up for the program, you'll want to re-register once you've retired using the personal email address ERS has on file. It's quick and easy. Just start shopping and save. Use your available resources. You can visit www.ers.texas.gov anytime. There you can access your account, where you can view your benefit summary, update life insurance beneficiaries, or update your contact information. The ERS events calendar, see a list of upcoming events like our webinars for Medicare preparation or annual benefits enrollment that you can attend from the comfort of your home or anywhere you have internet access. ERS publications. All retirees receive your ERS Connection, our quarterly retiree newsletter. You can also view it online or sign up to receive it by email and get it about a week before it's mailed. Subscribe to email updates. We want to stay on top of what's going on. At the bottom right-hand corner of the home page, you can click on the envelope icon and elect topics like legislative updates, wellness, Board of Trustees meetings, etc. that interest you. In addition, our website links out to our plan administrators' websites. You can also call to speak to us toll-free, 877-275-4377, Monday through Friday, 8 a.m. to 5 p.m. Central Time. Also, check out our Facebook page where you can read posts from our plan administrators, learn more about your benefits, chime in about an ERS event you attended, or tell us how great retirement is. We also have a YouTube channel where you can view videos about retirement and insurance benefits. Thank you for joining today.